Hey there, traders, and welcome back for episode number 139 from the StockBandit.tv. Hope you've had a great weekend and you're ready to tackle the markets in the week ahead. We know that the major averages are where most stocks are going to find their influence, and so that's where our trading week begins on Sunday. So let's take a look here at what's taking place in the market, and it's potentially positive, especially in the near term, for the bulls, which really have not made much of a showing since this April top was put in. Now we've seen a few, very sharp bear market type rallies, coming off new lows every single time. But last week we saw something very interesting. We started to pull back here, and that dip was bought, and we made a new recovery high in the process. So in the short term, we have a higher low, and we also have higher highs in place across the board. And that's very positive, and that's something that's very different for this market ever since this correction began from the April peak. So for the NASDAQ, we cleared the prior week's highs at 2260. We're now quickly approaching this 2280 level where the yellow line is. That was, of course, some resistance back here during May and June, and then it served as some short-term support until it was broken right there. So if we can clear the 2280, that would be even more positive. And then beyond that is going to be this June high right here, and that's the 2341 level. So that's an intermediate high. We've got some shorter term higher highs in place. We need to make an intermediate term higher high by rallying up through that level. It doesn't have to happen directly on this particular move. We can pull back and wiggle around, but as long as we can, kind of stabilize, and if this higher low is able to hold versus the July 1st low, then that's an extremely positive development technically for this market. By the way, Friday's rally did come on nice strong volume, so good things starting to happen for the bulls finally. For the S&P 500, this index, very same story here. We've got a higher low in place. We also took out the prior week's high, so we made a new recovery high here after a little hiccup or a pullback started to kick in. By the way, every time that we've rallied, all these pullbacks have only just slammed the market. They've been one way. And so to see a pullback of just a few days get met with more buying, that's something that's very unusual. So the S&P is now approaching this 1105 level. We're now through the 1100 area. This really, 1099 with our prior week's highs, and then 1105 is the next key level that was really respected during May and June. So if we can push through 1105, then the next spot to clear for the S&P is right up here, the June high, 1131. But good things starting to happen here for the Russell. This index was channeling lower. This is a small cap index. It did clear that upper channel line on Thursday, and then it saw some really nice follow through on Friday. So that's very encouraging. Friday's move, almost 2.5%. That really confirmed this higher low that had developed versus the July 1st low. It also took out the prior high, and so now we're clearing a channel here, a descending channel. Obviously prices were stuck in this channel. We're now moving up to change that, and that's very positive. The next level is right here, this yellow line, 670. We tested that a number of times here and never did close above that during May and June after really a number of attempts. We actually cleared it briefly intraday a few times during June, never could close above it. We need to see a close above it. So that's the next key level for the Russell, 670. For the Dow, a little bit less important to us as traders. We know it's only 30 stocks. However, this is the index that Main Street is most familiar with. So when they turn on the nightly news, they see that the Dow is rallying. That's where they get a little bit more confidence as, sideline, investors. So for us as traders, we need to pay attention to the Dow. We don't really take our big signals off of it, but we know that when the Dow is running positive, people are going to be starting to accumulate more stocks. And when the Dow is really starting to decline, people take notice of that and they start raising cash as well. So the Dow also confirmed a higher low here last week. It also took out that prior highs at 10,407. We finished at 10,425. And the next level is right up here near 10,600. We need to make a new intermediate high for the Dow, but things are starting to shape up and look very good. For the VIX, this is the fear index, volatility index, and 23 has been both resistance and then support a number of times, and we're now resting on this 23 area. If we can see this index, go ahead and just give that level up and move on down into the teens. That would really help confirm this rally that's taking place in the major averages. So it's going to be a very interesting week. Things are starting to turn much more positive, and that's a very good thing for us as traders. The best thing is we're getting lots of movement back and forth, and that means that there's always potential. So it is still the thick of earnings season. Pay very close attention to the calendar this week. Pull up an earnings calendar. Always make sure that you're not going to be holding stocks overnight that are set to report after the bell or in the pre-market any day. So thanks for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.